Very good morning, everybody.
Good morning, ma'am.
Good morning.
Good morning, ma'am.
Switch on the videos. Switch on the videos and revise the partnership quickly. Quickly. Today we will discuss profit and loss appropriation account and also interest on capital. But before that, I want everybody to quickly revise the last day's portions. So now one of you quickly tell me about the capital accounts. Which are the two methods of maintaining capital account?
Fixed capital method and fluctuating capital method.
Very good. Fixed capital method, fluctuating capital method. Tell me about fixed capital method. Fixed capital method. Sharat, can you please tell me about fixed capital method?
Under fixed capital method, the capitals of the partners shall remain fixed until additional capital is introduced.
Okay, that's fine. How many capital accounts are prepared in fixed capital method? One or two?
One.
Only one?
Sorry, two.
Two. Under fixed capital method, we will prepare two capital accounts. What are the names?
Partners capital account and partners current account.
Very good. Perfect. Now, what is recorded in partners capital account under fixed capital method? Okay, thank you, Sharath. Tomlin, where is Tomlin? Please continue, Tomlin. Tell me, what do you record in partners capital account? Oh my God, Sharath is drinking water.
Ma'am, opening
Yeah, Tomlin, continue.
Ma'am, opening capital and defining additional capital is introduced. And drawings.
Okay. Drawings? Is it drawings?
No.
No. Then?
Ma'am, any amount withdrawn.
Any money withdrawn? What is that? Irfan, please clarify. What is that amount withdrawn? Is that drawings?
Permanent capital.
Permanent capital. No, it's not clear. Okay, Tomlin said opening balance. That is the capital balance available in the balance sheet. That is there. Okay. New capital introduced is there. Okay. Then what do you find? Fixed capital method. Partners capital account. What is that next thing?
Withdrawal of capital.
Wait, Aditya, I'm asking Irfan. Irfan, tell me. Tomlin was telling about some money, withdrawal of money. What is that? Okay, Aditya, please tell him. What is it?
Withdrawal of capital.
What withdrawal of capital?
Permanent withdrawal of capital.
Permanent withdrawal of capital. Permanent withdrawal of capital. Is that a frequent withdrawal? Do you find it always? No, it rarely happens in the business. Rarely happens in the business. If it happens, we'll record it in the partner's capital account. Only during this two times, when additional capital is introduced and also when permanent withdrawal of capital takes place, then only the balance in the fixed capital method, fixed partner's capital account will change. Otherwise, always partner's capital account under fixed capital method remains fixed. Okay, now Anjo, tell me about current account. The second account under Fixed capital method, current account. Partners, current account. What do you see in that?
Debit.
Yes, louder. Where is Sanjo? Yes, Sanjo, tell me. I had shown you smiley faces that day on the account, partners capital account. Happy smiley and sad smiley was there on the credit side and debit side. What was that all about?
Debit balance or credit balance will be shown.
Then what are the various items shown on the credit side? Tell me that. Opening balance, okay, fine. Opening balance of the current account, if it is given in the balance sheet, the previous year balance in the opening balance of the current account, that is fine.
Interest on capital.
Interest on capital.
Salary commission.
Salary, commission.
Profit and loss of the operation if it is profit.
Profit, okay. Why is it recorded there on the credit side?
Cost profit.
Yeah. What is the reason that you write all these items on the credit side? Yes, Karthik, please give him the explanation.
Ma'am, all the items in the credit side, where it is when the partner receives the things, we record it in the credit side.
Okay.
And when the partner has to give the things, we record it in the debit side.
Very good. Okay. So it is the liability for the business. The capital account, you're right, Karthik. Whatever you said is right. Whatever items are received by the partner, we write it in the credit side. And whatever is paid, reduction in the capital, that is shown on the debit side. Now, who is preparing this capital account? It is the business. Business is preparing the capital account. So all these are the liability for the business. Okay, that's why we are writing it in the credit side. Capital account is a liability. Capital account is credited. Clear? Now, coming to fluctuating capital method. Fluctuating capital method. One of you tell me. Fluctuating capital method. Now, what is the difference of this fluctuating capital method from this fixed capital method? Anila, can you tell me?
Ma'am, in fixed capital method, two accounts are prepared, capital account and current account, but in fluctuating only capital account is prepared.
Yeah, wait. So only one account is prepared in fluctuating capital method. Okay. Then, okay, one account is prepared. Then what do you write it? Record in the partner's capital account, that particular account.
Ma'am, distribution of profit, interest on capital.
Okay, wait. Everything. Earlier, we recorded separately in the capital account and current account. Coming to the fluctuating capital method, all these are combined together and written in a single account. Okay, the capital entry, the balance, the previous year balance available, then the capital introduced, whatever, everything is written in the single account. Fine? Okay? Okay. Now, let's move on to profit and loss appropriation account. Profit and loss appropriation account. So, anybody having doubt with this capital methods? Anything you want to ask? Okay. Now moving to profit and loss appropriation account. So what is the meaning of appropriation? Appropriation means what? Yes, yes.
Distribution.
Distribution or division. Yeah, it is the distribution. What is distributed?
Profits.
Profit. Which profit? From where did this profit come from? Net profit. It is the net profit that we found out by preparing the trading and profit and loss account. Okay, trading and profit and loss account. Let's compare it with the sole proprietorship. See there was a single owner. So we prepared journal, ledger, trial balance, trading and profit and loss account. Then the net profit received, it completely goes to the single owner, the sole proprietor. So we didn't have to think about this distribution of net profit. So directly we took this net profit to the balance sheet. We added with the capital in the balance sheet. Remember? Yes. But here we have 2 or more owners. So we need to distribute this net profit among them. How to distribute this? It is for that purpose we prepare profit and loss appropriation account, distribution account. It is not the name, okay? Profit and loss appropriation account. It is for distributing the net profit from the profit and loss account among the partners, among all the partners, that we prepare profit and loss appropriation account. So immediately after preparing this profit and loss account, trading and profit and loss account, the next step is to prepare P&L appropriation account. Okay? That is why it is called, it is the extension of profit and loss account. Okay? P&L appropriation account is the extension of P&L account. Why? After preparing P&L account, after finding out this net profit or net loss, the balancing figure, that is transferred immediately to the extension P&L appropriation account. Now, what is this P&L appropriation account? Is it a real account, nominal account, or what is the other one? Personal account? Yes. P&L appropriation account is a nominal account. Nominal account. Again, who is preparing this? It is the business. It is in the books of business. It is from the point of view of the business. We prepare all these accounts. So, P&L appropriation account is a nominal account. What was the rule of nominal account? Yes. Rule of nominal account.
Debit all expenses and losses, credit all incomes and gains.
Very good. Debit all expenses and losses, credit all incomes and gains. That is the rule of nominal account. In accounting, we have 3 kinds of accounts: personal, nominal, and real, according to the traditional approach. So nominal account rule is debit all expense and loss, credit all incomes and gains. So all the expenses and losses for the business, we will write it on the debit side. Look at the format, P&L appropriation account format. Did you get it? Page number 74. You can see the format of profit and loss appropriation account. I hope my screen is clear. The account is visible. Okay, here we have the format. Debit side, credit side. Debit all expenses and losses. Credit all incomes and gains. So all the expenses for the business. Business have to pay salary or commission to the partner. Yes, salary should be paid to the partner. Commission, if it is decided to pay, it should be paid. So these are all the expenses or losses for whom? For the business. Interest on capital, it is a payment to be made by the business to the partners. Sometimes from the profit, we know we'll transfer some money to the general reserve account. So again, the profit is getting reduced. Even though we are transferring it to some other account, the profit is getting reduced. So, general reserve. Then, look at the credit side. Whatever is received, incomes and gains, credit all incomes and gains. That will be shown on the credit side. Okay? Look at the credit side. Interest on drawings. Interest on drawings, that is received from the partner to the business. Net profit. Now, let me tell you one more thing. Whatever comes on the credit side of the capital account will come to the debit side. Just the reverse. You can see the textbook. It is better to look at the textbook. There are two formats. Look at the profit and loss appropriation account and also the capital account. The items coming on the debit side of capital account will go to the credit side of capital account. Just the opposite. Except one or two figures like drawings and all, we don't have to show it in the P&L appropriation. Why? It is not the distribution of profit. Only the items which result in the increase or decrease in the net profit. Okay. So this file, I have forwarded it in the group. Please go through that. Okay. Preparation of profit and loss appropriation account. The net profit earned by the firm has to be distributed among the partners in their profit sharing ratio. But before that, they are to be given some agreed benefits. Some payments has to be made to the partners, like interest on the capital, salary, commission. These items will reduce the profit. It is from the profit we are paying this. So the profit of the business will reduce. Yes? Okay. Sometimes interest on drawings is to be charged from the partners as per agreement. Interest on drawings should be collected from them. This interest on drawings will increase the amount of profit. Are you getting it? From the net profit, we are making some payments like interest on capital, salary, commission. So what happens? Net profit reduce. Okay. When interest on drawings is collected from the partners, we are collecting it and it is added to the net profit. So that will result in increase in the net profit. So to make such adjustments, we are preparing profit and loss appropriation account. It is merely an extension, underline extension of profit and loss account. It is there in the textbook also, the same line. First sentence. Interest on capital and salaries, commission, etc. will be debited to this account. Interest on drawings will be credited to this account. If required amount may be transferred to general reserve account. If it is required, we'll transfer some money to general reserve account also. Now, after doing all these, whatever balancing figure is received, balancing figure from the profit and loss appropriation account, that is the profit available for distribution to the partners. In which ratio? Profit sharing ratio. If nothing is mentioned, how will you share the profit? Basil, can you tell me? If nothing is mentioned in the partnership deed about the profit sharing ratio, how will we distribute this profit? No. Not, I can't hear you. Maybe network issue. Okay. Yes, Pavitra, can you tell me? If nothing is mentioned in the partnership deed about the profit sharing ratio, how do we share this profits? Pavitra. Hannah.
The profits are shared equally.
Equally, very good. If nothing is mentioned in the partnership deed about the profit sharing ratio, profits will be shared equally. Okay. Now, let us see interest on capital. We are going to see more about interest on capital. Before that, let me ask you again, what is this appropriation of profit and charge against profit? Appropriation of profit, charge against profit, the two terms. Anybody, I'm not calling out names, anyone. Appropriation of profit, charge against profit. What is the difference between these two terms? Who's ready to give me the answer?
Charge against profit means we have to pay it compulsorily for running on the business.
Very good.
Appropriation of profit means after all the deductions, whatever is left, we should distribute it.
Very good. Very good. Okay. Good, good, good. Okay. So that is charge against profit and appropriation of profit. Certain items, certain payments that has to be compulsorily met by the business. Okay. So such items, we will show it on the debit side of P&L account. It is only after paying of such expenses we can find the net profit. Do you understand? Rent, payment of rent. It is compulsory, you should pay it. Otherwise, the owner will ask you to get out from there. It is a compulsory payment. So that's why we should show it on in the P&L account, debit side, expense column, expense side. But there are some items, only if there is sufficient profit, then only we need to make that payment. Is it clear? Only if you have net profit, sufficient net profit is there, then only you will have to make that payment. It is such items that we bring it to profit and loss appropriation account. Appropriation, distribution. Appropriation of profit means distribution of profit. When can you distribute the profit? Only when it is there. Only if the profit is available, then only we can distribute it. No. Charge against profit means it is compulsory. It is a charge. Definitely you should pay it. Sometimes after paying that, the business might incur loss. That is a different thing. That's okay. But this payment has to be met. That is charge against profit. Coming to this interest on capital. We are discussing the topic interest on capital. This interest on capital, it can be either treated as charge against profit or appropriation of profit. Interest on capital, the item interest on capital, it can be either considered as charge against profit, compulsory payment, or appropriation of profit. Only if the profit is there, then only you give. It is either or. Okay, clear? Now, let me take it. So, interest on capital may be treated as appropriation of profit or charge against profit. Now, let us see if it is treated as appropriation of profit. If interest on capital is treated as appropriation of profit, we have three methods or three techniques or three cases, you can say. We will have three cases. It is treated as appropriation of profit, okay? Only if profit is there, we'll be paying interest on capital to the partners. The first case is when profits are sufficient. You have sufficient profit. Then there is nothing to worry. The profit, we will distribute it to the partners in their profit sharing ratio. Interest on capital, if there is sufficient profit, then we will distribute profit in their profit sharing ratio. Interest on capital will be given based on the interest rate. Look at the example. See this file, I have shared it in the group. Please go through that today itself. Look at the example. Anand and Bahadur are partners sharing profits and losses in the ratio 1:2. So that is their profit sharing ratio. Interest on capital, the rate is given 6%. That is the rate. The rate and all, if it is fixed, it will be given in the deed. Okay? Partnership deed. Their capitals are, so their capital contribution is 20,000 and 10,000 respectively. So 20,000, 10,000 is the capital. Profit is 21,000. 21,000. So in this case, you can see, you will find out how much is the interest on capital. For Anand, it will be 20,000 into 6/100. Yes. It is interest on capital. How much is the capital? For the first person is 20,000. So he will be receiving 20,000 into 6/100. This much is the interest on capital he will be receiving. Again, the next person, 10,000. 10,000 is the capital. How much is the rate? 6/100. 600. So 1,800 is the interest on capital to be given to them. Payment to be given to them. So there is sufficient profit. Profit is 21,000. It is there. So look at the profit and loss appropriation account. Profit, we have profit and loss account 21,000. Interest on capital is sufficient, 1,800. We'll find the balance. So this is the case of appropriation of profit. There is sufficient profit, so you can give it. Okay. Now, when the profits are not sufficient, it is not sufficient. That is the second case. Second case is profit is not sufficient. Then we will distribute the profit in their ratio of their capitals. Note it down. When interest on capital is considered as appropriation of profit, sufficient profits are not available, then whatever profit is available, that we will distribute it in the ratio of capital, not in the profit sharing ratio.
Ma'am, can I say it also?
Yes? Yes, Anju?
Can I say it also?
You want me to explain it again? Your voice is not audible. See, I'll explain again. I hope that is a doubt. I mean, that is what you're asking me. Okay. See, earlier case, we saw that 21,000 is the profit. And when calculated, we saw interest on capital for both of them is 1,800. Correct? So see the profit and interest on capital. It is only 1,800 and we have 21,000. So there is sufficient profit. Now let's see the next example given. A and B are partner sharing profits and losses in the ratio. This is profit sharing ratio 3:2. They have capital 2 lakh. 2 lakh is the capital of A and B 1 lakh. Okay. And interest on capital is again 6%. So 2 lakh into 6 by 100. How much? 12,000 and 1 lakh into 6 by 100. 6 by 100 is the rate of interest on capital. How much? 6,000. So we need, how much money is required? 18,000. The business has to pay 18,000 as interest on capital. Correct? Now, see the profit. Look at the profit. How much is the profit available? There is profit. The business has made profit, but the profit is only 15,000. So first, on the capital given in the question, we will find out interest on capital using the rate. Okay, then we will find out how much is the interest on capital total should be given. That is 18,000. But the business is having only 15,000 profit. So is the business having sufficient profit now? No. Profit is lesser than interest on capital. So there is profit. It is not that there is loss. They are having profit, but not sufficient. Then it is not in the 3:2. Profit sharing ratio, PSR. Profit sharing ratio is 3:2. Okay. Whatever profit is available, how much is available? 15 is available. Whatever profit is available, we will share not in this profit sharing ratio, but in the ratio of capital. A has contributed 2 lakh. B has contributed 1 lakh. Find out the ratio. Ratio of capital contributed. Cut out all the zero. The figure is easy. So the ratio is 2:1. This is the ratio of capital contributed. Is it clear, Anjo?
Yes, ma'am.
Okay. Was this the doubt?
Yes, ma'am.
Okay. Okay. Yeah, that's it. So now we have 15,000. 15,000 is the available profit with the business. That 15,000 we will distribute it in the ratio 2:1. That's it. Look at the P&L appropriation. 15,000 ratio is 2:1. 15,000 into 2/3 will go to A. 10,000. A 10,000. 15,000 into 1/3, that will go to B. That was this case when profits are not sufficient. Now there is one more case when there is loss. If it is appropriation of profit, I told you appropriation of profit means what? Only if there is profit, we need to pay this interest on capital. And it is loss. Loss means what? There is no profit. So if that is the case, no need to pay interest on capital because it's not compulsory. It is appropriation of profit. Only if profit is available, you have to pay it. The business is not making profit, it is loss. Okay, clear? So, we have time. I'll continue. Interest on capital, it can be either appropriation of profit or charge against profit. If it is appropriation of profit, we have 3 cases. When there is sufficient profit, we will distribute it in the profit sharing ratio. If the profit is not sufficient, then we will distribute the profit in capital ratio. Capital ratio. If it is loss, no need to pay. Okay.